risk controls, you're going to see that there's simply no reason to fear where you should be placing your stop at. Okay, there's no reason to guess as to, you know, am I going to get stopped out, and fearing it also, because if you get stopped out where we're going to teach you, you need to be getting out of the market there. Okay, because it's probably going to be much more of a move in against you than if you were to stay in it. Okay, so we have an opportunity to be a buyer here as well. The market comes down, creates another consolidation, and then moves out of the consolidation. Okay, and the market structure and order flow shifts bearish here when we trade lower right there, because we broke that swing low. Now when this broke down, okay, we have to wait for another shift in market momentum. Okay, and this is the reason why I do not like this little fractal indicator. Okay, because remember I told you earlier that all I require is 3 bars or 3 candles to create a swing high. That's occurring right here. Notice there's an absence of a fractal arrow like it does here. That's because this big old candle here, okay, its high was above this candle's high, which would negate the formation of this arrow, or an arrow like this, a fractal up arrow, because the parameters require this candle to be a lower high than this one. But is this not a swing high? Yes, because it has a lower high on both sides of it. Okay, so this is a swing high. As soon as this candle broke here, we're back on the bullish momentum. Okay, and then we entered this range here. Okay, we started another series of days where those two moving averages have the 9 above the 18 moving average. So that we're in a bullish framework when the market structure is bullish. Okay, because again, we see this swing high here. When it broke to the upside, now we have to wait, okay, and expect to see the 9 be above the 18. Again, we're looking at a daily chart. During this time period, what you're going to be looking for is opportunities where price again finds support, pulls back within a range, okay, either on a 4-hour chart or a 1-hour chart. And when you see what we're going to be talking about later on in this video, what you're specifically looking for and hunting, 90% of the time it's there, and there's no reason for you to rush to chase price. If it doesn't do these types of things, you don't take a trade. Okay, so again, we're looking to be a buyer here, and all of the ranges in here, again, with all these candlestick patterns, you could have all kinds of articles and such. Oh, these are the spinning tops. These are the, you know, the dojis and you know, whatever you want to call it, the boxcar willies. I'm not a subscriber of, you know, a plethora of candlestick patterns. Really, I like the dojis, long-legged dojis, the hammers, and I like railroad tracks, and that's about it. I don't have any other faith in any other pattern. So you can kind of like leave that in your notebook. Don't ever ask me about candlestick patterns outside of those, because I don't subscribe to the views that they're useful. Okay, now on a daily chart we have the highs in here. Okay, and look at the bodies of these candles. You see that? This is where I like candles. Okay, these are the ideas that I think are beneficial to using candlesticks. Do you see how this dealing range level, okay, if we take that out, see how the bodies of the candle here, the opening was at that level, the close of that candle was at that same level, the opening was just a pip below that level here, and the close of that candle was, I'm sorry, I've been saying that wrong, sorry. The close of this candle is on that, and the open on this candle is at that same level, and the close of that candle is just a pip below it, and the open on this candle is right at that same level. So you see this candle here, okay? After we had a little minor retracement in here, okay? We had a retracement. This is the range, because we have this dealing range here. When price broke through it, okay? See how this is a swing high? And see how this is a swing high? When price broke through it, market structure confirms once again that it's on the upside, okay? But we also have this dealing range support. So we broke through this. Now, just because this would be classified as support level an old resistance turns support, does not mean that price needs to get all the way back down there. Okay, so how do we use that information? Well, if you pulled your fib from that level up to the range high, which is here, okay, that candle, because we pulled down intraday, okay, inside of that range, you come right down to that 70.5 level. Okay, do you see how that's useful to you? We retraced within that. So having that, that gives you an idea, again, where to anticipate price action to retrace into. That's not all of the characteristics we look for, but we will be looking at other things that allow us to break down on a 4-hour chart, where we can also look for institutional order flow to support the idea and the notion that we should be expecting higher prices. And again, we move higher and higher and higher. The higher swing lows here, okay, again, are higher in each successive move higher. Okay, and then we see market structure break down in here. Okay, and we did rally off again in here a little bit. Okay, while we're in this green buy framework, where we overall would still be looking for opportunities to be a long trader. I want you to see the low here or this low here. Either one, they're very close in proximity, but we're just going to use this one here. If you look at that low up to this high, okay, you see that? I'm going to move the fib over here so you can see the lines. There we are. What I did was I used the range of this low to this high. Again, this is a daily chart. Price comes right down into what level? The 79% retracement level. Look how many opportunities where price stayed within that optimal range, okay, and it rallied up. If you look at where we were in regards to that price movement, again, using these bodies of the candles up to the high of this candle right here, that's 156 pips. Again, 156 pips within a few days. That's inside of 1 week's range. There should be no reason why you can't capture at least 50 pips out of that. Okay, the opportunity here. Okay, the bottom line is there's opportunity for you to make money and still, quote unquote, be wrong, because ultimately the market did move lower outside of this area here. Okay, and then we moved into a selling framework. Okay, you have the market break it down, making lower lows, okay, and lower highs. So we have the swing high here with a fractal. Now I got to change this fractal to a different color because it will not be seen against the red. So we have this fractal low here. Price breaks down through it, again confirming that we are in both concepts agreeing with lower prices. We have the two moving averages. The 9 is going to be below the 18. Remember, when we marked out this box, that was giving you the bearish framework to expect lower prices. Momentum wise, institutionally, they're going to be looking for order flows lower. Okay, and you see technically they are moving lower because we see the swing low here break down. Okay, so when you see that happen, what you're going to be doing is you're going to be looking for the ranges, okay, to form. You're going to be looking for rallies. You're going to sell into those rallies. See this low here, and we see the price actually move up here. This high down to that low. Come to the 62% retracement level, okay? And again, we're going to discuss a concept that is useful in terms of institutional order flow, where we can again identify areas on a lower time frame where this is again one more area where order flow and short-term market structure shifting, and where institutional order blocks are retraded into to get another piece of the pie, if you will, before they start to move lower. You can see when the market moved up into that range, it did not spend a whole lot of time there, and that's why you had this very thin wick. Okay, the market opened here, rallied up, and then traded lower and closed lower, and that creates that black bar. Okay, the close is near the low of the day. You can see the close on this candle is 130.64 with the low at 130.47. market, as price moves lower, it breaks each new successive lower swing lows, and each swing high is lower as well. Now we have again an opportunity where the market creates a swing low here, trades lower, okay, and comes back here and takes out this swing high. Okay, that's going to happen a few different times while we are in trending environments, because again, you're going to come back and take the stops and search for liquidity. Whenever you see swing highs like this on a daily chart, naturally that's where support resistance is going to be implied by traders, and they're going to think that their stop loss orders are protecting above that. And you'll see the market rally up there just above it, take it out, and then break lower. It still does not change the fact that we still are working within a range, okay, and that being this high to the low. And if you look it up in here, you'll see opportunities to be a seller on the lower time frame. Again, once we break lower here, we have everything in an agreement as well. Okay, and I'm going to subscribe to the notion that you probably may have lost money here or missed opportunities. We're just going to call this a dead opportunity area where we didn't get any kind of reasonable positive equity increase. There was nothing that we profited from in here. Everything gets back in sync here when this candle breaks below this swing low here. Okay, and then we have the high here is penetrated here. So now on this candle, everything's bullish, okay, inside of this overall sell framework. So what we're doing is what? We sit on our hands until when? Here, okay, we expect what? See this low here? What is that? That is a swing low. Again, the fractal indicator arrow is useful to communicate general support, swing highs and lows. But again, this is the reason why I don't like it by itself, because it will avoid printing an arrow where I would classify that as a swing low. So when market opened up down here, market structure and order flow has shifted to bearishness again. Okay, and this being the most recent swing high. As soon as this candle closes and this one opens up, this one would be a swing high to me. This is a swing low, and everything would be bearish here. Okay, and until that high is taken out on the upside, okay, or any newer swing high forming is taking out, I would be looking for lower prices. Okay, and the same thing happens here. We have this swing high because we have a candle with a lower high here and a lower high here. So this is a swing high to me. Okay, price breaks through it here. So now we have, on a very short term, market structure being bearish. Okay, I'm sorry, bullish. Again, inside of a bearish framework. So we're looking to do what? We're selling into rallies. We're selling into it. Okay, so this is where you're going to be applying what we commonly refer to as market flow or order flow. You will see on a daily chart many times rallies going against what would be considered market flow, being bullish. In other words, we have this swing high here. It's a candle with two lower highs on either side of it. When this candle blew up through it, we would be considered bullish daily market flow or order flow. But you have that range here that you got to work within. Okay, and that looks like this. See how we went right up into that area here? Both candles stopped dead on the 79% trace level, and then boom, it moved lower. Okay, and now we have everything back in sync again. We have this low taken out. We have both the framework on the moving averages suggesting lower prices, and the order flow and market flow is bearish because we took out the swing low, so everything's moving lower again. We will be continually looking for selling opportunities, okay, and inside this area here. Now again, we have the market creating a nice rally and reversal. Again, we are not trying to call the lows. We are not looking for the the tops and the bottoms in the marketplace. So even if we were to take a trade in here somewhere, okay, if something led to our analysis that we should suggest taking a short trade and we got stopped out, what do? We accept the loss and we move on. Okay, write it in our journal, keep it as a learning process and continuously looking for the next opportunity. All of this right here